Hi, I'm Tammy from UFXBank with your week in Forex. Today we'll take a look at last week's market highlights. The Dubai debt crisis and restructuring is now seemingly behind us with few casualties left in the aftermath. Global equity markets finished the week with modest gains, while the greenback continued its slide as the DXY briefly dipped below 74.40. In the commodities space, gold continues its rally, closing well above 1,200. Now let's take a closer look at the markets as we welcome foreign exchange analyst Martin Smith. Welcome, Martin.
Hi, Tammy.
After a brief bout of risk aversion, the markets moved beyond the Dubai crisis and restructuring. Do you believe we're going to face any additional fallout?
Well, we'll only know for sure, of course, when the next installments come in. But the market seems sufficiently satisfied with the debt restructuring, and most analysts feel exposure is limited.
As risk returned to the market, we also saw equity markets rally on positive economic data. In the U.S., we also saw treasuries rise, which pushed 30-year fixed-rate mortgages to lows not seen in over 35 years.
Well, this is a very positive news for the economy. However, there is a report that did not seem to garner much headline attention, and this talked about 1 in 4 homeowners being underwater on their mortgages. Well, this has raised doubts about the long-term viability of the soft US recovery. However, with homeowners now able to refinance, it will lessen the financial burden, placing more disposable income in the pockets of consumers.
Yes, but with unemployment so high, won't that lessen the effect as homeowners are unable, if they don't have jobs, to refinance their mortgages?
Yes, well, this is actually why President Obama and the Treasury stated last week that they're going to put pressure on mortgage companies to modify existing home loans.
I see. Well, what impact do you think we'll see on the Forex market because of this?
Well, interest rates are always a prime mover of the Forex markets. In this case, I'm afraid it's bad news for the dollar. Lower rates mean, of course, a lower dollar. And in the long run, this may help speed up the recovery, which will eventually mean higher rates, but we're not there yet.
Tell me, what do you think about the surge this week that we saw in the euro and in the Swiss franc?
I think current handles across the G7 are a product of the typical year-end price action. I also believe current levels in today's markets are still slightly undervalued.
So what levels are you forecasting for the short term?
Well, the euro, I think, will hit 1.55, the Aussie to 0.95, and the Kiwi to 0.75. The CAD's a bit trickier because the BOC is willing to play in the market. But if they keep the rhetoric aside, the CAD will surpass dollar parity. If they don't, well, I think 1.02 seems fairly certain.
Looking to the immediate week ahead, what can we expect?
We have a number of interest rate decisions due out this week from a number of central banks, among them the Bank of England, the Bank of Canada, New Zealand. Although most decisions are pretty much written in stone, it will be the accompanying language that the markets are really going to be paying attention to. In addition, of course, Japan GDP will print, as well as the advanced retail sales in the US.
Well, thank you, Martin Smith, for joining us once again. Until next week, I'm Tammy, and don't forget to visit us at UFXBank.com for simple, safe, secure trading.